joining me for a closer look at what's playing itself out in the market scene is Nick Kunze from Sanlam Private Wealth. Nick, thanks so much for your time today. So the first week of trade for the fourth quarter, and markets seem pretty mixed. That global rally we saw towards the end of the third quarter somewhat tapering off, and we're starting to see, traders take a bit of a wait and see approach when it comes to equity markets. How much of this reversal can be attributed to Powell's hints at smaller rates, and how much can it be attributed to what's playing out in the Middle East?
Yeah, good evening. I think probably a little bit of both, but certainly more weight in what's happening in the Middle East. I mean, the market has tended to certainly, I think, be a little bit sanguine about what was happening over there, a little bit. No, certainly not concerned enough as far as we could see, and then obviously temperatures and the dial been ratcheted up over the last couple of days. As you pointed out, oil price $75 this morning. It's up $3. It's obviously causing a few issues, and also I guess certainly taken against the backdrop of the markets coming off an extraordinary third quarter. In fact, if you look at the numbers, the best quarter for the JSE All Shares since 2013. So maybe a little bit of a pause ahead of what will be probably quite a busy earnings season.
It does seem like local markets in particular are shrugging off those Middle East geopolitical issues. What is fueling local markets?
Well, I mean, it's difficult. We don't often get to talk about the good news in SA while the rest of the world isn't. So let's take it while we can. In general, I think it's just coming off 100 days of the government of national unity. That was over the weekend. Certainly some positive rhetoric coming through. I mean, let's not all forget load shedding seems to be a distant memory. I don't want to jinx it yet. But overall, Mr. Ramaphosa's administration taking a very centrist approach. It's been well received by markets, and you've seen that. I mean, look at those asset classes. The sovereign bonds in South Africa up almost 18% this year, one of the best performing emerging market bonds as well, which is where the sort of foreign money is coming. So we're getting foreign flows, we're getting positive feedback. The rand is a little bit firmer. Yeah. So in general, that seems to be favoring SA markets, and also without sort of underweighting what's happening, it must be taken against a context that now South Africa is reasonably small in the emerging market space. So it doesn't take much for an overseas fund manager to put, I don't know, a couple of $100 million to work, and it does move our market quite quickly, but nevertheless, we'll take it.
We'll definitely take it. We'll take that and more rate comes if they do come through. Yeah. Now, sticking with some good news, in the US, we had the ADP print for September. And Nick, does the better than expected private sector employment growth of 143,000 signal a robust hiring in the US and setting the stage for, that non-farm payroll print out this Friday?
I think it does set quite a nice tone. I mean, this is, after I think 5 odd months of sort of, bouncing back of negative private sector growth, it's a very accurate indicator. It is literally taken off the pay slips. So it's about as accurate as that it gets. It does set the tone for Friday's non-farm numbers, very volatile though, and I think it is worth keeping quite an eye out for investors, because Mr. Powell has made no secret that the unemployment number is something he's watching pretty closely. And that, if you remember back in August, it caused a little bit of a brief shock when we had that big jump in unemployment. So it is an important number, but so far the indications are that we might get that soft landing, and that's what we were looking for.
We definitely are. Now, we have earnings season on the horizon, kicking off next Friday. The tech sector has been under the spotlight, performing quite well on the back of that AI boom, that AI rally we've been seeing coming through to markets. Could we be in for another bumper quarter for that sector?
I think it all depends on what Wall Street's expectations are. It's a little bit of a game. They tend to lower that bar and they beat it, and we continue with the outperformance. My personal view is that I don't think it'll be as sort of high flying as you've seen the last couple of quarters. There is a little bit of a slowdown. You can see it in the numbers. There has been a few companies that are warning. Microsoft also came out a little bit flattish. Don't forget Meta last time was a little bit of a miss as well. So I think there will be, I suspect, a bit more of a muted sort of response to earnings season, but also the big number as well. Don't forget, first week in November, we've got the US elections as well. So it's going to be volatile, and I think there's going to be a lot of sort of data points coming through, not just the earnings.
Nick, before I get your stock pick, let's touch on Tesla. They reported their third quarter vehicle production and deliveries report, missing analyst expectations, but deliveries and production were better than what was recorded in the second quarter. What's your sentiment around Tesla, considering it's been facing, tough competition from Chinese EV makers?
Yeah, that's a very good point. It is one to watch. And I saw those numbers coming across as I was sort of running out the office. Stock down about 3.5% off the back of it. So it was a bit of a slight miss. Tesla very geared. They've made no secret of the fact they're gearing it up towards China. That's where a lot of the growth is coming from. That's where they've just opened up a new factory. And that's where they see their next stage of their growth cycle coming from. So I think a little bit disappointing at first glance. Also, don't forget that facing increased competition from exactly from those Chinese EV makers who are coming to the market as well. And now you probably understand why Mr. Musk is backing Mr. Trump and his tariffs for EVs, exactly what we're seeing. So at first glance, yeah, a little bit disappointing, but you would have to get some more feedback when they report full numbers later on this month.
As we wrap up, let's just get your stock pick for the day.
So I think appropriate, ExxonMobil, given what we're discussing, oil and geopolitics, oil price back over 75. ExxonMobil stock is down about 5 or 6% from its highs. This is against a context of certainly a very weak oil market up until a week or two ago. And I think the market is discounting these geopolitical risks too much. I think there's a lot more noise to come and a lot more uncertainty. ExxonMobil, one of the bigger players, cash flow positive. They generate a lot of money, and it's also not overly expensive. So around these levels, those who want to hedge against a continuing, unfortunately, continuing noise of the geopolitics in the Middle East, ExxonMobil is certainly one to look at.
Nick, thanks so much for your time and just taking us through the day's markets activity. That was Nick Kunze from Sanlam Private Wealth.